Okay, welcome everyone. Thanks for your patience and thanks for your inquiries in the last few days. And as you know, as you might know, I frequently take breaks because trading takes a toll if you do it full time, or if you do it following the major activity in the market, then and that means basically, sorry, I'm messing with this. Hello everyone, I hope you can see the presentation here. Thanks for joining in. As I was saying, let's see if I can open the chat here. Welcome everyone. Let's see who's in the chat. Welcome Pantelis, Greg, Kerry, Arvid, Horace, Sinatra. There is Adinda as well, Roland and Fundo. Thanks for your kind words. And FX Trade admin, I want to take the opportunity to thank Desi for her great work. Thanks, Desi. Thanks for being here every day and supporting us. Hello, everyone. Hello, Kerry, Pantelis. Long time no see. Marco. Hi, Marco. So we are back. As I was saying before, trading, especially during the time where there is high volume, it takes quite a toll if you live in North America, and definitely if you trade Forex only, North America wouldn't be the best spot. Let's be honest, right? Of course, we can cover the Tokyo room open, which is always interesting, and it always offer opportunities. And however, if we were only involved in Forex, North America wouldn't be our best choice. Probably somewhere in Europe would be your best choice. But we're also involved in stocks and futures, and so when it comes to stocks, you want to trade the most higher volume possibly in the world, and that's only available in the United States. And there are over 8,300 or 400 issues when it comes to stocks in the major US markets. Okay, so I'll be waiting that be waiting for a couple of minutes here so that we have more people joining in. Welcome Marco, welcome AA. What if it was a triple A, like in the times of the CDOs? So I'm just hanging around here waiting for a couple of minutes. So welcome everyone. Welcome to the FX Trade Tokyo Open Live Room. We start again today. This is a daily show that features real trading. As you can see, I'm fresh, as you can see from my voice. I'm back from Italy. I just came in yesterday. And I'm ready to start again the show and my trading, of course, to resume my trading. I've not been trading in the last 2+ weeks. And as you know, this show comes at the very heart of the Asian session. We made a FibStalker, a daily show. Sunday, we started Monday this week because yesterday we jumped it, but normally we start on Sundays to Thursdays, 7 p.m. to 7:45 p.m. Eastern time. So remember that, and as you know, I take risk very seriously. Before I get into that, let me just say hello for those who don't know me. Actually, this is, sorry, I'm missing. Here we go. That's me. Thank you very much for joining. This is my place where I do trading when I'm at home. Sometimes I do trading outside, and in the evening I always do my live show from here. So thanks a lot for joining in. I'm the FibStalker. Now you know who I am, and we can go back. As you know, I take risk very, 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 very seriously. And before I continue, I want to just mention this important slide here. That's very important. And so just let me. And as you know, those who know me know that trading, it's all about risk management, really. It's much more about risk management than it is about the trading method. And you will definitely go through very good trading methods, but you will not recognize them just because you don't trade them using a low risk. I've had fun asking, did you have any trades going while you were in Italy? No, I didn't. When I stop, I stop. I don't want to spend my mental energy. I took a little short on the 1 day and a half on the SDS, a short double SP 500 ETF, and that's it. That's the only thing I did, because when I don't trade, I just don't want to have my mental energy tied to it. So thanks for that question there. Now, trading is risky, as you know, and I have to mention, I always do this. I'll be very quick here. Trading Forex and its derivatives, futures, options, and CFDs and other instruments with retail of exchange transactions involves substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FS risk disclosure on the website. And talking about the website, there is a beautiful new website. FS Trade is going to uncover in a few days or few weeks. You can see the beta there, and as anything else, I mean, we need a little bit of time to get used to the new responsive format. I believe it's going to be a success anyway. It might be a little bit more difficult to initially to find things, but then, I mean, it's very, very intuitive. So the information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. All the information I'm giving here is for general information, educational purposes. Of course, I trade myself, and those who trade with me know that. I, Giuseppe Basile, FibStalker Consulting Incorporated and FS Trade will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. So you can read the rest, and I don't want to tie it all the times on this. Let's go and dive into the market, which is what we are here for. Now, I didn't have a lot of time yet. You can see that I was back yesterday evening, and I'm still adapting to the jet lag, so be kind on me. I'll be kind on you. And let's go and review together these markets. As you know, I mainly in this show look at Forex. Forex is not the only thing I do. Actually, I do trade Forex stocks and scalp futures every now and then. And I think if you want to become a professional trader, or if you want to make a living from trading, I believe you should probably not just stop to Forex. Obviously, we all have to start with our instruments. I started with stocks in the past, then ETFs, then futures, and then eventually Forex. My edge is recognizing the presence of effects of algorithm on price. And I do not target pips and fundo. I target, and that's a very good question because it comes to risk management. I don't target pips. I target unit of risks. Okay, units of risk. Yes, I do some money trading stocks as well in fundo. Okay, so as I was saying before, that of measuring your performance in pips, it's really not measuring anything, because you have to measure your performance based on the risk you take. And my risk is usually less than 1% of my account on any position I take, either on Forex or stocks. Okay, to me, saying I've done 60 pips doesn't make any sense, because if my risk is 20 pips, I've done three times my risk. So my position is sized based on the pip risk. It's not sized. It's not a one lot sizing. That's not how professionals trade. Okay, professionals do not reason in terms of pip. They reason in terms of risk, dollar risk. All right. So welcome, Fundo Pantelis, Greg Kerry, Arvid Horace. Let's see if anyone else came in, and we start getting into Greg Kerry, Arvid Horace, Sinatra, FibStalker, Adinda, Roland, Fundo, Double A, Marco, and Desi. So let's dive into the charts, and let's start reviewing. I'll start from the SP 500 because it's quite interesting. And let me see. All right, let me share this. So you were looking at me, not looking at. All right, so let me share. All right. Okay, so you should be able to see one of my video here. And if you don't get the picture with the high definition, please switch to 720 HD on YouTube, and should be able to see it. So I'm going to. Okay, so I'm going to enlarge this, so you should be able to see it. All right, so what you see here on the screen is the SP 500. For those who follow me know that I never look at current price just on one time frame. I always start from the weekly time frame, and as we navigated this market together, you will remember that this market never broke the 1792 level here on this current contract. What you see here on the screen is the continuous contract of the SP 500. Why this is important? Because when you trade stocks as well, you want to, and I want to, I want to know whether there are any opportunities on the short side. Okay, and we have been following the sequence of measure move of this market, and it is possible, and it's very possible, this market is going to reverse. Now, this market is oversold at the moment, and we're going to review also the sequence of measure move. Mind that we will not enter a bear market on stocks until we break the 1792. Of course, from the current price to get there, it's a long way to wait for a confirmation. So any opportunity will be given before we will actually get it. So let's review. First of all, let me give you a level where, if this market continues lower, the bull could show up. Okay, this is an extension level. It's the 1955. This is a FibStalker level. Hi, Rod. Welcome back. And hi, Scott, as well. Thanks for joining in. So keep this 1955 in mind, because if we have kind of a 2, 3, 4 days or more kind of free fall here, that's a level that will be very interesting to use the FibStalking timing in order to validate whether there is support there. Okay, now that said, let's go and review on the daily time frame what happened here. We had a first extension from the same anchor, which as you know broke price into that first target, and then eventually the second target. There's a slight break in the next extension long, which held, and broke price again into the first and second target. Now, as the market became extended, though, we started seeing the algos on the daily time frame faltering, and in fact, they were not able to hold the first time here, although the second time they broke price into the first target. The first target, the second target was never reached. And then this market at the moment is still holding the next measure move. So algos are still holding this market. It is my belief, and the 2665. If it is broken decisively, we can still get a last a move higher, and that would be driven by the smaller time frame, and then this market would become a short. Okay, if these current highs would not be challenged. As I mentioned before, the 1955 is a number that you should write down, as this market could become a place where we could see some sort of participation or bounce if this market goes in a free fall. Okay. Hi Todd. No, I've not been looking at US dollar Japanese yen. It's a very interesting market. As we mentioned in the past, we're going to review it. As we mentioned in the past, that market actually never printed a triple bottom, because triple bottom do not exist really, and they are very, very rare, especially in Forex. And I'm going to show you what's my current reading. I've not been trading this, as I mentioned before, because I've not been trading the last 2 weeks, with the exception of a little short on the SP 500. So through the double bear ETF. Any questions in relation to this? I'm not going to get into the smaller time frames here. We have, we have 50% retraces here on the very small time frame that are working at the moment, pushing this price lower. So this price is moving in extension short on the smaller time frame here. So we're going to see on the 30 minutes what you see here. This is the 30 minutes charts, and this chart is extended on the 30 minutes. And what we could see here, it's a rally into 2035. Not something really interesting. It's only 4 points. Very good, Todd. I mean, a short is the right direction. So we're going to review that in a moment. Very quickly, gold and silver are rallying, and gold, as we mentioned in the last few weeks, it's basically in a lateral move on top of this 1196 level that was never challenged. So this market is a lateral move, and the huge move today, 134, it's huge compared to the activity in the last 2 weeks here. I'm much more interested in silver, actually, because I have a position in silver, an ETF position in USLV, which is tribal silver here. And as you know, I don't want to review this. I would rather review the daily of the mini future here. And as you can see, this market closed very, very strong here. And in the past, we mentioned that, and we mentioned this way before that first level would have been tested. By the way, it's Greg here. Hi, Greg. You should be happy, actually. I hope everything is good and you're celebrating today move higher, even if you exited half of it. If you did it, I don't know. But as you can see, we mentioned this potential long here. The market never broke the 61.8% level, pushed higher, and then moved laterally. Eventually retested that level, and it's now going to probably at this point, it's very improbable that this market is going to turn again at this 1604. I believe this market has the potential to, sorry, this is the, of course, this is 1604. This market is propelling itself towards that first target, 1660. And that would be a level, if you are loaded with silver, would be a level to unload, certainly unload part of it. Okay, I think silver has the potential to go much higher. Today action was actually very, very good, and there is the possibility for this market to actually continue high. Any questions in relation to the SP 500, gold and silver so far? Of course, I'm looking at silver on the daily time frame basis. Okay, so I see nothing to do here. If you're looking for actions on silver, first of all, I don't day trade silver. I day trade the Forex, but I take positions on silver here. If you have any questions, you just let me know here, and we get it from there. Now, as you know, I also look at the dollar index. I believe the dollar index is very, very important, and that's important for any asset class, basically. And that's the dollar index. As you know, we were looking for what? We were looking for the 94.35 to be retested. And there is no surprise here. After a few weeks, and in the last 2 weeks, actually last week, we saw the 94.35 being tested and the first target here touched. All right, now we are on top of a very important area here, and I believe this area has the potential to again reverse price here. However, I believe that if this level is pierced, and eventually it will be pierced, because when we look at the dollar index on a very, very long time frame here, we see a series of lower lows and lower highs. So I do not believe that 78 is the low for this market, and this level has been tested a number of times. We counted 5, and this would be the sixth one. 1, 2, 3, 4, 5, and this is the sixth time. And we will need to see what happens there. Now, this move here has been completed. It has been, the target has been reached. So even if we see a bounce from this level, it's not impossible. It's not impossible. We need to see how this market behaved this week. What I would do, I would leave anyway the second target of this. The second target of this, so the first target is okay. I would actually highlight the second target here and just leave it there. This market could actually just continue lower into that second target. However, if we get a bounce here, this market can bounce up to 96.24 and it would still be a short. This is very, very important. Okay, so there's something that it's hard to see when you use traditional technical analysis on charts, which is very, very clear when you analyze these charts using the effects of algorithms on price. And algorithms here are here looking for a long in this area here, and these are the weekly participants. And if they're successful, they will need to battle against what? They will need to battle against daily's shorts. Okay, and that's the story, how the story is going to unfold. Now, if weeklies do not show up here, this is going to affect all the Forex pairs that trade against the US dollar, of course, because they're going to get stronger. They're going to, potentially move higher. And this has the impact, of course, on the majors like the euro dollar, the US dollar Japanese yen, which we're going to review in a moment. But if weekly show up here, for sure, we're going to see this market very probably, because nothing is sure in the market, very probably we're going to see 96.24 trading. Okay, and Fund is asking, do you see more trading volume this week for silver? Now, and Fundo, I mean, it's very difficult to project volume. As you can see, I don't even use volume in it. I use levels. Okay, so that's a very difficult question to answer. When I look at my charts, what I have, it's an area of support, which saw participation twice, is this area here, and I have a target. So I have no idea how this market is going to move there, whether it's going to, retrace completely this move today and then moving higher. I have no idea about that. What I know is that there is a target there, and that target is actually that target is actually it is actually targeted by all the algos who participated here in these areas here. And and we have a risk-free trade here, and that's the most important thing. So even if the market would retrace to these lows or these lows here, this wouldn't affect us because we always exit and make the risk zero, basically. Okay, that we have an initial risk when you take the trade, but we always try to take trades in those areas where we anticipate participation from algorithms so that we can abate that risk to zero. And that's you know, a little bit more involved concept. It's not really complex. I mean, you know, trading concepts are not complex. But if you want to know about risk and risk-free, please go back to FibStalker previous shows, and whenever you see in the commentary talking about risk-free, watch that video because it's going to be very, very interesting. Hello, Bankai. Thanks a lot for your email. Welcome back to you as well. It is good to see you as well. I'm sure that you have been doing very, very well, like in the last 3 months, also without me. So happy to see you here. So let's see if anyone else has joined here. So thanks for joining. Right, and thanks for that. I mean, you'll find a lot of interesting information there. Now, I mean, I like to touch on this concept from time to time, and if you review those videos, you know, I'll be here every day, so you can ask any questions. So the quick answer to your question then is that no, I don't know whether the volume is going to increase. I have no indication of that, no way for me to even understand that. I don't use volume at all. I only use levels. And what I know is that we have a target here, and all the guys who actually bought around 1480 are going to look at that first target, and that will probably unload part of that position. All right, so we reviewed that. Okay, nice. We're gonna review that. Bankai, I'm slowly getting into it again, and very good, very good, very good. All right. Okay, so I think we reviewed the dollar index here, and now we know what we have to what we can anticipate in this market. I just want to look at. Just give me 1 second here, and just want to see this. You know, dollar index could actually put a rally from here, but as I mentioned before, the level we're going to watch is that daily. You know, that daily level that I mentioned before. So we had participation here, and then the next measure move here where algos might potentially participate is going to be this one. Okay, so if we rally here again, 96.22 is the level to watch. All right. Okay, very well. So I see Pantelis is also very active there. So let's look at the euro dollar here and see what's going on here. This market is obviously being pushed higher by a weaker dollar, and we know that weekly shorts are waiting for this market 122.31. It doesn't mean that this market will get there. What it means is that if it gets there, there'll be participation on the short side that we have to test, and where we test it is using the FibStalking timing technique, which is a procedural technique to test those levels, minimizing risk. So far what we have seen in this market is not very moving in a very orderly way, and one of the reasons is that, as you know, this market has been moved by news recently. The weekly have no interest in pushing this price lower. The what is pushing this price higher at the moment is profit taking from this move that has been going on now for 1 year here. Now let's look at the daily time frame here, and this market is actually trading in extensions at the moment, and the market has been using the first of three longs bar here, which is one of the, so this market has been testing, has tested this 13.93. Okay, if this market retests this level, we have to remember that it's testing previous highs here. If this market retests successfully the 13.29 or 30 here, there is going to be a possibility for a continuation higher. Okay, and that continuation high would be in line with what we anticipate for this market on the larger time frame. The dollar index will also tell the story. If the dollar index collapses or loses that 94 area, we're going to see this market into 122.31 very, very quickly in a matter of weeks. Okay, so if you hold the long, I see no reason, especially from lower levels, I see no reason at the moment to drop that. Okay. So Australian dollar, nice setup daily. Euro, Australian dollar, weighted daily, nice. So we can review those right away here. Australian dollar, US dollar. The Australian dollar, US dollar, obviously it's trading this. Okay, so there are considerations that we have to do here. Okay, this market is in a counter trend move higher at the moment, and the first level of resistance has not been tested yet. That's 0.7750. If you go back to previous reviews as well, you will remember that you will see that this level has been mentioned. There's another level that's been mentioned as well. This is the 89.58. So this market is still in a sequence of measure move higher on the daily time frame here. That's what I see at the moment. Mind that I've not reviewed the markets yet, so I'm just reviewing them live with you. So what we have seen in this market, we have traced a sequence of measure move and also traded a sequence of measure move here. The market got participation at this 71.15 and then went to the first target, second target, and well above the second target, but continued to moving, using our model. We kept capturing the way this market has moved. Okay, and this market has traded the next measured move here into the first target, and then the same anchor new high came into play as well. Okay, so I'm not tracing this after the fact or randomly. Those who know me know that this measure move here, these rules are traced before the fact because we follow rules. And this measure move here, I'm sure Pankai has traced it before the fact, and actually this could be traced 3 days before the market went to test the level, 4 days before, sorry. So Pankai, if this is the long that you have in mind, as I imagine, I don't use the pattern and fundo. The only thing I use is the FibStalker methods, which is the rules that I'm showing you here. And I do not believe in traditional technical analysis. I use it rarely. In this show, I also feature the continuation style. If you want to learn more about it, I've created a course on that you can see on FX Trade, and that uses traditional technical analysis like continuation pattern. So we have participation at this level. Again, this level 1, 2, 3, 4, 5. Let's say 4 to be conservative days before, and then this market found participation here. We have no reason to believe at this stage that this market cannot continue higher. Indeed, the first area of resistance is going to be 0.7750, and we are at 0.7591. All right, so and that's what I see on the daily time frame. I extend typically when I trade this analysis to the smaller time frames as well, which I'm not doing that, which I'm not doing at the moment here. Okay, so some could see on a smaller time frame shorts as well in play here, but those shorts are playing now against a long as well, a daily extension long. All right, so to be very careful here, as after those long have traded here, the market started moving um, in a sequence of measured move here. And to be very defensive here, I would only consider this broken if price goes below 75.67. Otherwise, this market is battling between a 4-hour short and a daily long, and we always know that the larger time frames tend to win. Okay, so sorry, I'm Fund. I do not choose bad pattern. The only thing that I use is the only things that I show here, and I use naked trading using a variation of the Fibonacci traces, which we use to model algorithms in some classes of algorithms in high volume markets. Okay, so that's the in a nutshell what we do here. So I think there was another market that was mentioned as well, and if you have any questions, please go ahead. Of course, I never shy away from answering questions. And excuse me, excuse me. So um, euro, Australian dollar as well. Yes, and then we will review the yen. So euro, Australian dollar, it's a very interesting market that when we review the larger time frame, we know what's going on in this market, and we know that although we saw this move out in the last few weeks here, and we're going to review that in a moment on a smaller time frame, we also know that the this market has traded shorts, very clearly here. So although we see a retrace here, it is my belief that this retrace is going to be capped. And one level that I see on the weekly time frame here, we see two levels. One is an extension, and the other one is that is in play at the moment. It's pushing this price lower, and the other one is a 50% retrace. These are the only two levels I'll be interested in testing on this time frame. Of course, we do not only look at the weekly time frame, we also look at the other time frames here. So apparently there is a short here. So let me drop the other levels here. Let me focus on the 50, 71, 72. This is where the area of potential short starts. All right, and this has the potential to push price much lower into that 140, 70 area, which would be an area where weekly longs would be interested to test this market. Okay, so when we look at the smaller time frame here, which is the time frame just below. Okay, what we see here is that this market has been moving laterally and then eventually pushing higher. It didn't make it, at least yet, and it might not make it into the 152.32. So this is not a long for sure, and that level that I showed before is actually holding this price lower here. So I'll be very careful in longs for this market. That first target would also negate the weekly extension shorts. So if that happens, I'll be very cautious. Hello, FX Ambassador. How are you? Thanks a lot. Welcome back to you as well. I hope you had a good break as well. And so let's review the US dollar Japanese yen as been asked here. Now you remember that in the past we were looking for what? First of all, in the past we captured a beautiful trade. That was the lows to lows here. Sorry, highs to lows, of course. And there was the 21 level, and we brought that to 114. Okay, and very good. I'm happy. Market has been good for you. We're going to review the pound versus yen in a moment. So we captured this. We also knew that weekly interest, it's only at 170. And you have been hearing me often saying that that's the level where eventually this market will go. And I'm saying this since, you know, the market has pierced the weekly longs somewhere here. And then I said, right, so 170 is the level. So for all of you who stayed short, congratulations. And you know, I've taken the 120 to 114. I'm happy with that. 121 to 114. I'm happy with that. Was what I was waiting for, and you will remember that very well. But obviously, in this case, I was wrong. But I also say that if the market doesn't follow up, we always have ways to capture it. Okay. So the market never came back to that 118.30 we were looking for, unfortunately for me and for you. Well, I feel fortunate that I didn't have to eat my hands you know, when I was back because such a good level is traded. Neither has, that was not the actual level was the 116.40, as you will remember. That has not traded yet. I mean, that has not traded at all. Okay. Is there still time to short US dollar Japanese yen? Absolutely yes, because when the market is extended like this and fundo, we use extensions to model the next retrace. Okay, and that's something that I've not reviewed this market yet, but I'm doing it right now. And this market is trading in extensions here. Okay, that's the reason why 114.40 has traded is the very reason why I said in the past that there is no triple bottom. When people were looking at 1, 2, and 3 here, people were looking at these levels here, and then they saw the lower low here, which was a trap for bulls. Sorry, for bears, because there was a stop out, and then, you know, people actually took advantage of that. But the problem is that there was this short that was already in play. Okay, so one of the reasons why I wasn't sure whether this market could actually go down up to that 116.40, which is that's a daily level, while 118.30 is a weekly level. But the reason why, I mean, you know, this market had traded shorts already. Now, to be precise, that's not a short. The short is this one. Okay, so the 114.33 has been tested once, 2 times, 3 times on the weekly time, and then eventually push this price lower. Okay, now to answer M Fundo, thanks for the question. That's a very good one. We have to go. Okay, I should rephrase. It's not that we have to go to 170. We have to change and do a mental shift here. That's very, very important. The point is, if we go to 170, there'll be weeklies there for longs, but there are no weekly longs at this stage. All the weeklies are shorts and dailies as well. All right, so how do we use this information for the next trade and fundo? And this is good for myself and everybody as well, because I'm doing a review here as well. If we have price into 109.41 already, and now moving into the second target 106.50, 85, let me tell you this: whatever low we trace, whatever low we print after 106.85, I challenge you, and I challenge you to use this trace here. All right, whatever lows, you use this trace from this level here to whatever lows, and that will give you an area, potential area of resistance after profit taking will happen on this move lower. Okay, so we'll be looking at that for a continuation trade short, if given the opportunity by this market, into 170. Okay, so that's for Mfundo. Thanks for the question, as well as for all of you, if you are willing to take this advice. And you know that I always put my reputation on the on the and actually I put also my money where my mouth is. So that's what I'm telling you here, Mfundo. Okay, and you can use also this as a test to look at how consistent and regular these levels and these models are to actually model actual participation from the market. Okay, and can you see here that I gave you this level, wherever the low, I don't know where the low is, okay, but the low, we are going to update it every day. So whatever the low will be, I give you already the trace that you're going to use to anticipate the next level of resistance. Okay, so do you at all worry about BOJ at these levels? I think, Todd, it was you who brought to us the news, actually to our attention, and it was a very, very good point. You brought to our attention, or someone else, I cannot recall at the moment, someone else brought to our attention that news of the three huge Japanese banks who basically published that report saying the move lower in US dollar Japanese yen, it's ended. And I believe that was somewhere here, okay? No, the answer is no. I'm not worried about what the BOG could do. The activity of the BOG could just, first of all, I mean, the BOG alone will not be able to reverse this market if US dollar index, if the dollar index does not agree as well. Okay, so let's not believe that, you know, banks, excuse me, can actually do anything. You will remember the story of Soros shorting the pound back in 1992. Again, Soros versus the Bank of the Bank of England. So no, I'm not worried. Todd, I will. Yes, the Fed would have to cooperate. Yes. So so see, I'm never biased. And I'm never biased, not because I do not respect the view of others. It's that I don't want the view of others to cloud my view. And you know, make no mistake, of course, no matter is sure 100% of the time, but you know, this analysis has served me well and served my students well for some time. And I'm not going to consider that. So what I considered here is the level that I want you to look at. Okay, so whatever low this will print, we'll keep trading this market in extensions. Okay, so what I'm gonna do, I'm gonna again leave the second target there and eliminate all the rest, and that will give us the mark here after, or if we touch this level, we're gonna start tracing that lows to lows there, and that's our area, will give us the area of resistance. So for an example, I mean, if the market tests exactly that second target, what we're going to do, we're going to trace from this low here. And you know, I explained to people who take part to my coaching program why we use those levels and how we derive those levels. But if we get there, just for a reference, the level is going to be 108.96, basically 109 is going to be the area. And as you can see, there's no relation with supply and demand in the past. I mean, I don't model the markets like that. I leave that for others. I'm not saying that it does not work. That's not the way I look at the market. Okay, I totally respect the work of others, and whatever works consistently and makes money should be followed. And that's something that you want to keep in mind. Okay, so that's for Mfundo and all of you who taught as well, who's trading US dollar, Japanese yen. Of course, if you have got a position here or here, you may even risk to just keep your position moving, right, lower, because at this stage, I see it's going to be very, very difficult that this market is going to challenge an entry at this level here or at this level. Of course, anything can happen, and if that happens, that'll be a good opportunity for a better short. I wish it happens. Okay. All right, so it's 7:50, so I believe we have to do a reality check here. I would go longer, unfortunately I cannot, so I'm starting a recap of our session right now. So we started with the SP500, which is not what you see here, but this is the SP500 delayed daily here. What we mentioned is that this market actually respected the 1792 and has the possibility to actually continue this correction. I don't believe this market is going to drop just like a rock here. I believe there is the possibility for another round higher and possibly a double top. We don't know. We will see. We studied the sequence of measurement on the smaller time frame, and we will identify what happens there. We then reviewed gold very quickly and silver. Gold and silver are moving laterally. Gold is moving on top of 111.96. Silver is moving on top of a level that you will see here on the weekly and the daily chart, namely 1486. We also mentioned that this market has a first target at 1660. And although anything can happen and this area coincides with previous size, we believe that this market will make entry at first target possibly within this week. Okay, as per the volume and Fundo, we are not able to anticipate what volume we're going to take, we're going to get from the market, and we don't use the volume at all. Euro dollar, we mentioned the fact that this market is basically using an extension along the 113.29, which still have the potential to keep pushing this price higher into the 114.90 and eventually 115.70. This will also depend on what the dollar index is going to do. And we also mentioned, of course, the dollar index, and as anticipated, we showed that the dollar index went straight back into that area that we mentioned several weeks ago, 94.35. It took some time, but we know now that if weekly longs show up in this area that has been tested 6 times now, there is the potential for this price to move into 96.24. 96.24 would be a short. So a move into 96.24 here would not negate the daily shorts. Very, very important. The longs, weekly longs, will win only if 96.82 is pierced on the upside. Okay, so these are the levels that you have to keep in mind. And after that we reviewed the Australian dollar, US dollar, and I mentioned that we have a short potential at 0.7750. That short has not been tested yet, and longs are participating and have participated at this 0.7490 here with targets at 178.32. All right, so this is a sequence of extension longs, and the market has all the potential to get into that level after this lateral move here. We also quickly reviewed the euro Australian dollar, which is testing a weekly extension short and has the potential to move into 140.73. We also showed a higher level, which is the 50% from previous highs to lows. And then we mentioned the US dollar Japanese yen. It was a nice discussion here. Thanks a lot for Mfundo, Todd, and everybody for bringing up the very good questions here. And we mentioned that this market is trading into a second target 106.85 on the daily time frame. On the weekly time frame, we know this market will only be tested by weekly longs if and when we will get into 170. So we also mentioned the level and that we have to use for an extension chart here, 109. Is going to be the level if the second target is touched and then the market bounces over profit taking. Okay, so this is very good. It's going to be an opportunity. I want to trade 108.96 or whatever price is given once this level has been tested. Target 173. All right, so guys, thanks a lot for being here. I hope you liked the show. We are back full throttle here. Of course, I didn't have a lot of time to review the market yet, but I'm gonna get into it now. And hope to see you tomorrow. I hope if you have any questions, you can drop me an email as usual at fibstalker@gmail.com, which I'm dropping here, or you can reach me on Twitter if you want. I also have you're very welcome, Scott and Marco, Todd. Sorry, thanks a lot. You're very welcome, and I hope this opportunities on US Japanese yen will materialize soon. Of course, opportunities are there every day because I only showed you analysis on the weekly and daily time frame, but really we repeat this analysis on the 4-hour, daily 4-hour, 60 minutes, and on high volume markets, all these levels hold very, very well. And of course, we never buy blindly or sell blindly these levels. We always manage this seriously, and I have a confirmation mechanism which is given by my FibStalker timing technique, which is called FibStalking actually, which gives my name as well, my nickname. And so in the coming days, if you join us, we're gonna get more of it. I'm gonna go back to the analysis here, and actually. There is really a lot to look at. I also want to I want to thank all of you who actually decided to join the coaching program. I have a coaching program starting in May. Now is the time to join if you're interested, and if you want to get more information, you can write to me, or you can click on the link that you see at the top of this page. All right, so thanks a lot for joining me today. I hope you found this interesting. It was a good time, and I really enjoyed doing this analysis. Of course, I'll be much more prepared in the coming days, so I'll hope to see you in the coming days, and that's it. So thanks a lot for being here. So good luck this week, and it's not about luck. It's a little bit about luck, but it's often about skills and of course the right discipline and psychology to only take the trades that have the highest probability of working. And one of these this US dollar Japanese yen, this US dollar Japanese yen trade would be a high probability trade as well. All right, so I'm going to leave you with these slides, and thanks a lot for joining me today. All right, bye-bye now.